Many people spend their entire lives chasing a carrot they themselves have set. Designed to be unattainable, the first major mistake is confusing income level with the quality of intelligence. I've seen brilliant men with degrees from the best universities in the world ruin themselves simply because they couldn't control that primal urge to spend what they didn't have to impress people they didn't like. You must understand that arithmetic has no feelings and doesn't care how hard you work. If your expenses are greater than your income, you're a slave, regardless of whether your office has silk carpets or cement floors. The real modern tragedy isn't the lack of opportunities, but the lack of self-control in a world specifically designed to make you lose your mind every time you reach for your wallet, turning your potential into a series of monthly payments that chain you to a desk for the rest of your working life. If you want to win at the game of life, the first thing you must do is get off that treadmill. Society calls the adequate lifestyle because that path is paved with debt and constant anxiety. Freedom isn't the ability to buy expensive things or drive the latest car, but the ability to not have to think about money when you wake up in the morning, and that can only be achieved by living below your means. It's curious how people feel ashamed of being frugal, when in reality frugality is the ultimate expression of rationality and self-respect in a system that wants you to be a consumer. Every dollar you save isn't just paper money, it's a piece of freedom you're buying for your future. Insurance against other people's stupidity and against the blows that life will inevitably deal you sooner or later. Most investors fail not because they lack intelligence, but because they have too much temper and can't stay still when the market goes berserk due to panic or greed. Real money isn't made by frantically buying and selling on a trading platform, but by sitting back and waiting, letting time do the heavy lifting while you cultivate your mind. Compound interest is a force of nature, almost like gravity, but it requires a patience that most people simply don't possess in this age of instant gratification and constant notifications. You have to train your mind to ignore the noise, to not envy the neighbor who got rich quick with a foolish bet on a speculative bubble, because envy is the foolishest sin of all, as it's the only one that offers no pleasure. To be a successful investor, you have to build what I call a lattice of mental models, drawing on the best ideas from all disciplines so you're not like the man with only a hammer. You can't understand the financial markets if you don't understand human psychology, cognitive biases, and how panic spreads like a biological disease in an uninformed crowd. Worldly wisdom is what allows you to identify a good business from a mediocre one, and that wisdom is only gained by constantly reading and analyzing your own mistakes with painful honesty. You have to be a learning machine. If you go to bed as ignorant as when you woke up, you've wasted a precious day on the path to independence and maturity as a rational human being. I'm often asked what the secret to longevity and success is. And my answer is always the same. Avoid stupidity before attempting to be brilliant in any field. It's far easier to identify what will ruin you and simply steer clear of it than to try to find the magic formula for absolute success in a volatile market. If you want to know how to be happy and prosperous, first analyze what makes people miserable and make sure you don't do those things under any circumstances or social pressure. Don't smoke. Don't drink excessively. Don't go into debt to buy unnecessary luxuries. And don't surround yourself with people who have rotten character or questionable ethics. At the end of the day, your reputation and integrity are the most valuable assets you have, and once you lose them for a handful of coins, there's no going back. You must learn to operate strictly within your circle of competence and have the humility to admit you don't know when faced with something outside your expertise. Intellectual arrogance is the cause of history's greatest financial catastrophes, perpetrated by people who believed they could predict the future based on mathematical models that ignored human frailty. Stick to what you deeply understand, seek out businesses with a lasting competitive advantage, and don't be seduced by fads that promise impossible returns with no apparent risk. Risk is always present, and the best way to manage it is to have ample safety margins in everything you do, from your investments to your savings and your relationships. If you do this with discipline and maintain an unwavering work ethic, you will not only become wealthy, but you will also earn the right to have done so. Observe how large companies operate, and you'll notice that the best aren't those trying to do 1,000 different things, but rather those that dominate a niche with relentless, almost religious efficiency. The same applies to your financial life. You don't need 500 brilliant ideas to retire comfortably. You just need 2 or 3 good decisions and to avoid ruining them along the way through impatience. Excessive diversification is often an admission of ignorance. If you understand one business perfectly, you don't need to own 40 others that you barely grasp to feel secure in the market. Security comes from knowledge and the ability to assess reality as it is, not as you'd like it to be in your most optimistic fantasies of quick riches. Learn to look at balance sheets with the eye of a detective and the heart of a skeptic, always seeking the truth behind the numbers. Patience is a form of competitive advantage in a world that has lost the ability to concentrate on anything for more than 5 minutes at a time due to technology. If you can maintain focus on a long-term goal while everyone else is distracted by the latest crisis or trend, you've already won half the battle. Don't be fooled by those who say this time is different, because human nature doesn't change, and cycles of fear and greed have repeated themselves since the dawn of commerce. Your job is to remain calm when others are losing their heads and to be greedy only when others are terrified. But for that, you need to have saved beforehand. Savings aren't just accumulated money. They're the fuel that allows you to seize the opportunities that the panic of others unexpectedly presents to you. Many people believe investing is a numbers game, but it's actually a game of character, where those with the thickest skin usually reap the rewards. It doesn't matter how many charts you analyze if, upon seeing your portfolio drop by 20%, you run to sell for fear of losing everything at rock bottom. You have to develop a steely philosophy that allows you to sleep soundly while the world seems to be crumbling outside, confident that you have selected real assets with intrinsic value. The difference between a speculator and an investor is that the former prays for the price to rise tomorrow, while the latter knows that value will eventually prevail. That peace of mind isn't bought with money. It's built through years of study, self-knowledge, and the firm resolve not to let emotions dictate your financial decisions. Finally, he understands that financial success is a means to an end, not an end in itself, and that this end should be a life of usefulness and wisdom. It's pointless to die with a full bank account if you haven't cultivated deep relationships, helped others grow, or left the world a little better. Munger always said that the best way to get what you want is to deserve it, and that's a universal law that applies to both money and love. Be a person of your word, keep your promises, work hard, and never stop questioning your own certainties, because the greatest enemy of knowledge isn't ignorance, but the illusion of knowledge. If you follow these principles with a tedious but relentless consistency, time will become your greatest ally, and fortune will simply be a logical consequence. Continuing along these lines, we must understand that most financial disasters begin with excessive optimism that clouds basic judgment. Optimism is a wonderful tool for a salesperson, but it's a deadly poison for an investor who needs to see reality with almost surgical detachment. I've observed that people tend to project the recent past into the infinite future, believing that because prices have risen for 5 years, they will continue to do so forever. This is the most common form of cognitive blindness, a disregard for regression to the mean that ends up devouring the savings of the unwary. You must learn to be the skeptic in the room, the one who asks what could go wrong instead of fantasizing about how much you could gain, because in this game, the one who best survives the downturns is the one who ends up reaping the greatest rewards at the end of the road. Risk management isn't something you can delegate to an algorithm or a financial advisor who charges fees regardless of whether you win or lose. The real risk is the possibility of permanent capital loss, and the only way to avoid it is to deeply understand what you own and why you own it in the first place. Most people don't have a strategy, they have hope, and hope is a very poor strategy when facing markets that show no mercy. You have to be able to explain your investment thesis to a 10-year-old. If you can't do it simply, you don't understand it well enough, and therefore you're gambling, not investing. Mental clarity is your most valuable asset, and it's cultivated by eliminating unnecessary noise, breaking news, and expert opinions that change every time the wind blows in a different direction. Let's talk about envy, that hidden engine that drives so many foolish decisions in modern society and is capable of ruining even the wealthiest people. Envy is the only sin that has absolutely nothing to do with fun. Gluttony gives you a good meal, lust gives you pleasure, but envy only brings bitterness and a constant sense of inadequacy. If you spend your life comparing your progress to someone who had a stroke of luck or took unnecessary risks that paid off, you're surrendering control of your happiness to external factors. Your only real competition is the person you were yesterday, and your only goal should be to improve your decision-making process a little bit each day. Wealth built on comparison is fragile wealth, because there will always be someone with a bigger yacht or a fatter bank account to remind you of what you're missing. One concept most people overlook is opportunity cost, which is essentially the price you pay for not doing the next best thing available with your time or money. Every time you buy something, you're not just spending money, you're giving up everything that money could have generated if it had been invested wisely over the next 30 years. This perspective completely changes your relationship with consumption. You stop seeing $1,000 expense as trivial and start seeing it as the loss of $10,000 of your future freedom. Munger always said that life is a series of choices, and those who win are the ones who choose the options with the greatest life expectancy and the least residual risk. If you apply this filter to every important decision, from your career to your investments, you'll see how success begins to accumulate almost automatically through the sheer elimination of mediocre options. Mental resilience is what separates those who last in this business from those who are wiped out at the first serious storm. You have to develop a thick skin, an ability to withstand criticism, and the loneliness of going against the grain when everyone thinks you're wrong. Historically, the best opportunities have arisen when the consensus was one of absolute pessimism. But it takes a special kind of character to buy when everyone else is selling with tears in their eyes. It's not a matter of pure intelligence, but of emotional stability and having a philosophy of life that doesn't depend on external validation for security. If you need the market to prove you right every day to feel intelligent, you'll end up being manipulated by daily price fluctuations, losing sight of the true value of the assets you worked so hard to identify. Intellectual honesty is perhaps the rarest and, at the same time, the most necessary virtue for anyone aspiring to worldly wisdom. It means having the ability to recognize when you've been wrong, to change your mind in the face of new evidence, and not to become enamored with your own ideas simply because you've defended them publicly. Many investors go down with the ship because their ego prevents them from admitting their original thesis was flawed, preferring to lose money rather than lose their image of infallibility. Munger used to say that we should destroy at least one of our favorite ideas each year to keep our minds fresh and open to reality. If you can't argue the opposing position better than your opponents, then you have no right to hold a firm opinion on the matter. That's the only way to protect yourself against the damaging influence of confirmation bias. Consider the importance of the incentive structure, because, as Charlie Chaplin said, if you show me the incentive, I'll show you the result. Almost all human behavior, especially in the financial world, is dictated by how people are paid and what behaviors are rewarded or punished within an organization. You can't expect an insurance salesperson to give you unbiased advice about whether you really need that insurance because their livelihood depends on you saying yes. Learning to read the incentives of the people you do business with will save you more money and headaches than any advanced economics course. You should surround yourself with people whose incentives are aligned with truth and integrity, and steer clear of systems that reward sales volume over service quality or honest advice. Self-directed learning is the only kind that truly matters in the long run, because the world changes too rapidly to rely on what you learned in a classroom 20 years ago. Munger was a voracious reader not for entertainment, but because he understood that books are the cheapest and most efficient way to acquire the wisdom of history's greatest thinkers. You can spend an afternoon with Seneca, Darwin, or Benjamin Franklin for the price of a fast food meal, yet most people prefer to waste their time on fleeting distractions. The accumulation of knowledge works exactly like compound interest. Each new idea you learn connects with previous ones, creating a network of understanding that becomes exponentially more powerful over time. If you're not reading, you're operating at a massive competitive disadvantage compared to those who do, with discipline and curiosity. Success requires a delicate balance between extreme ambition and contentment with what you already have, something that seems contradictory but is essential to avoid going crazy in the process. You have to work as if your life depended on it, but at the same time maintain a stoic detachment from immediate results, understanding that the process is the only thing you truly control. Munger lived a life of great wealth, but always maintained a personal simplicity that allowed him to avoid being a slave to his possessions, something many modern millionaires never grasp. True wealth is having choices, not owning things. It's the ability to say no to anything that doesn't align with your values or your peace of mind. If money takes away your freedom instead of giving it to you, then you've failed to execute the original plan, no matter how many zeros are in your bank account. To conclude this section of our reasoning, remember that time is the scarcest resource and the only one you can't get back, no matter how much money you make in the stock market. Therefore, investing shouldn't be an obsession that consumes you 24/7, but rather a tool to make your money work for you while you live a meaningful life. Learn to automate your savings. Select high-quality investments that don't require constant monitoring, and trust the system you've patiently built. The ultimate goal isn't to be the richest person in the cemetery, but to have lived a productive, rational, and useful life, leaving behind a legacy of wisdom that others can benefit from. In the end, what remains isn't financial assets, but the quality of character you forged while trying to navigate the complexities of this fascinating yet perilous world. We often underestimate the impact of human relationships on financial success, thinking that numbers are all that matter on a spreadsheet, but the reality is that business is, first and foremost, an exchange of trust. Munger always emphasized that the surest way to get what you want is to ensure the other party also wins, creating mutually beneficial relationships that can last for decades rather than pursuing a quick, selfish advantage. If you earn a reputation for being difficult to deal with, or worse, someone who doesn't keep their word, you will have closed more doors than any amount of capital could ever open. Integrity isn't a luxury you can afford once you're already rich. It's the foundation upon which lasting wealth is built, because in a world full of charlatans, honesty becomes an extremely scarce and, therefore, incredibly valuable asset. It's crucial to understand that a person's character is their destiny, and this applies with brutal force to the world of investing and personal savings. I've seen people with astonishing natural talent throw it all away due to a weakness of character, whether it was an inability to delay gratification or an arrogance that prevented them from seeing their own blind spots. Cultivating virtue isn't just for philosophers or theologians. It's a practical necessity for anyone who wants to navigate the storms of the market without foundering in the attempt. You must work on your flaws with the same intensity that you study financial statements, recognizing that your internal biases are far more dangerous enemies than any external competitor or any global economic crisis. Discipline is the bridge between goals and achievements, and that discipline is born from a character forged through the repetition of correct decisions, even when no one is watching. Let's talk about the importance of specialization versus generalization, a balance that Charlie managed with unique mastery and that is often misunderstood on the road to success. While it's true that you should be familiar with the big ideas from many disciplines, it's also true that the world pays handsomely for excellence in a specific area where you can be the best. The key is to be a generalist in your thinking to avoid narrow-mindedness, but a specialist in your execution to maximize your value in the job market or investment landscape. You can't be an expert in everything, but you can understand enough about everything to know when an expert in a specific area is lying to you or making a mistake due to overconfidence. This duality allows you to move nimbly in different environments, protecting you from technological changes that often render obsolete those who only know how to do one thing in one way. One of the biggest mistakes young people make is underestimating the power of inertia, both positive and negative, in shaping their life trajectory. Every small decision you make today, whether it's saving $10 or reading 10 pages of a serious book, is creating momentum that will become almost unstoppable over the years. The same is true of bad habits. A small amount of credit card debt or a tendency toward laziness may seem insignificant at first, but they are like a snowball rolling down a mountain that eventually triggers an avalanche. Mental inertia is difficult to break once it has taken hold, so it's vital to choose your habits with extreme care, while you still have the flexibility to change them without excessive cost. Once the wheel of discipline starts turning in your favor, the effort required to keep it moving decreases dramatically, allowing you to achieve goals that once seemed like unattainable dreams. Most people complain about a lack of opportunities, but the truth is, opportunities are everywhere. The problem is they require preparation, and most people aren't willing to do the tedious work before the glory arrives. Munger said that opportunities don't come looking for you. You have to be ready to jump on them with all your capital and all your energy when they finally present themselves, which happens very rarely in life. If you haven't saved money and cultivated your mind during the quieter years, when the big opportunity arrives, you'll be empty-handed and clouded, watching others reap the rewards. Luck is simply what happens when preparation meets opportunity, and since you can't control when opportunity will appear, your only task is to dedicate yourself tirelessly to preparation. This approach eliminates the anxiety of waiting because you know that every day of studying and saving is one step closer to the moment when fate will test you. We must learn to embrace reality as it is, not as we would like it to be. This requires an iron will to shatter our own illusions and face the harshest facts with serenity. Delusional thinking is the root cause of most business failures. where managers convince themselves that an unsustainable situation will magically improve without drastic changes. In your personal life, this means being brutally honest about your spending, the true value of your skills, and the viability of your long-term plans. No embellishments or excuses. Denial is a powerful psychological defense mechanism, but in the financial realm, it's a sure recipe for utter disaster and prolonged misery. Learning to love the truth, even when it hurts, is the mark of a mature mind, and the only way to correct course before it's too late to save the ship. Another vital aspect is understanding complex systems and how small variations in initial conditions can lead to drastically different long-term outcomes. The economy, markets, and life itself are not linear processes where 2 plus 2 always equals 4, but rather dynamic systems full of feedback loops and unforeseen side effects. Munger urged us to think in second and third order, asking ourselves, what next, whenever we make a decision or analyze an external event that seems simple at first glance. Most people only see the immediate consequences of their actions, but the wise person looks beyond the horizon, trying to anticipate how their actions will affect the entire system, months or years later. This ability to see beyond the immediate and temporal boundaries is what allows you to avoid traps that seem beneficial in the short term but are poisonous in the long run of a career or investment. We cannot discuss success without mentioning the importance of humility, not as false modesty, but as a realistic acknowledgement of our limitations as fallible and biased human beings. Intellectual humility allows you to learn from anyone, even your enemies, and keeps you receptive to information that contradicts your deepest beliefs, which is essential for surviving in a changing world. The most dangerous investors are those who believe they have cracked the market code and that their past success guarantees future genius, ignoring the role luck played in their outcomes. Staying humble means continuing to study as if you were a beginner, even after you have reached the top, knowing that overconfidence is the prelude to a fall. The day you stop being a student of reality is the day you begin to lose your competitive edge and become vulnerable to obsolescence. Time management is, ultimately, managing your own life, and Munger was a master at protecting his schedule from the trivialities that consume the lives of most powerful people. You must learn to say no to unnecessary meetings, social engagements made out of obligation, and any activity that doesn't contribute to your personal growth or the well-being of those around you. Time is the only asset that money can't buy, and yet people give it away with astonishing generosity to anyone who asks with a little persistence. Create sacred blocks of time for deep reflection and reading, away from the digital interruptions that fragment our attention and prevent us from reaching states of creative flow. The quality of your thoughts depends directly on the quality of the time you dedicate to cultivating them without distractions, and in a knowledge economy, depth of thought is your greatest differentiator. Finally, consider that the journey to wisdom and financial independence is a marathon, not a sprint, and that endurance is far more important than initial speed. There will be years of stagnation, moments of self-doubt, and external crises that will test your resolve, but the key is to remain true to the core principles that stand the test of time. Don't look for shortcuts, because shortcuts are often longer roads to failure disguised as convenience, and the price you pay in integrity is rarely worth the reward. If you stay rational, save consistently, invest wisely, and never stop learning, the end result will take care of itself through the sheer weight of the odds in your favor. Life will reward your patience and discipline in ways you can't even imagine today, allowing you to look back with the satisfaction of having played the game the right way. it is imperative to discuss the importance of unlearning as much as we learn, because many of the ideas that served us a decade ago are now nothing more than baggage hindering our progress in a new environment. Munger insisted that the human mind is like an ovum. Once an idea enters, it closes to prevent others from entering, and this is a biological trap that we must actively combat with willpower. Don't cling to your opinions just because they are yours. Treat them as hypotheses that must be tested and discarded if they fail the test of reality. This cognitive flexibility is what allows a veteran investor to recognize a paradigm shift before the rest of the market does, protecting their capital from the obsolescence that devours dogmatists. True intelligence is not about knowing everything, but about having the ability to empty the cup when necessary, to refill it with fresher, more useful knowledge for the times we live in. Envy and resentment are undoubtedly the most potent poisons for both the soul and the bank account, and avoiding them should be an absolute priority in your daily mental hygiene. I've seen people destroy solid businesses and stable families simply because they couldn't stand that someone else was progressing at a faster pace than they were. The progress of others should be a source of inspiration, or at the very least, a neutral factor in your analysis, but never a wound to your pride that leads you to take desperate risks to catch up with them. Focus on your own process, your own metrics of success, and the peace that comes from knowing you're operating with integrity and rationality on your own terms. If you manage to eradicate envy from your system, you will have eliminated the number one cause of human unhappiness and the primary cause of errors in judgment in the world of finance and power. Consider the concept of redundancy and why having multiple sources of security is so vital in a world that is inherently uncertain and prone to black swans. Never put all your faith in a single asset, a single client, or a single skill, because the universe has a cruel way of reminding us of our fragility when we become overconfident. Redundancy isn't inefficiency, it's the premium you pay for long-term survival, allowing you to absorb blows that would destroy someone operating with no margin for error. In your savings, this means always having cash on hand for crises. In your career, it means never stopping learning complementary skills that make you valuable in multiple economic scenarios. The robustness of your financial life is measured by how much you can lose without your lifestyle or peace of mind being seriously compromised. As you grow older, you realize that the greatest investment you've ever made isn't in stocks or real estate, but in the people you've helped and the wisdom you've generously shared. Knowledge locked away in a drawer is useless. Its true value is unleashed when it's put into practice to improve the lives of others and raise the level of rationality in your immediate community. Charlie Munger dedicated much of his life to teaching, not because he needed the money or the recognition, but because he understood that a society of rational people is a more prosperous and peaceful society for everyone. Your legacy won't be the size of your investment portfolio, but the clarity of thought you instilled in your children, your colleagues, and those fortunate enough to have crossed your path. Strive to be a source of light and logic in a world that often prefers the darkness of dogma and the noise of unchecked emotion. To conclude this journey through the mind of a sage, remember that life is too short to spend it unhappy or doing things you don't deeply respect in your heart. Money is merely a tool to buy yourself the right to not compromise your values, to speak the truth without fear of the consequences, and to live by your own terms of integrity. Don't get lost in accumulation for accumulation's sake. Use your wealth to build a life you can be proud of when you look back on your later years. Be curious, be courageous, be rational, and above all, be someone others can trust implicitly. For that is the essence of true greatness. If you consistently follow these steps, you will not only have learned to invest and save, but you will have mastered the most difficult art of all, the art of living a life truly worth living.